The company says Denel Asia has not traded due to differences of opinion with the National Treasury and negative media publicity. Denel went to court to force the National Treasury to give it approval for a joint venture with VR Laser Asia, but now it has abandoned this bid. The timing of Denel's exit of the Asian market has raised eyebrows, especially because the Gupta family sold businesses in South Africa this week.
It has nothing to do with the Guptas selling their assets. It has a lot to do with business acumen and business looking forward in terms of the business, and also we can't keep divisions that are not functioning as shell company. We're not a private. We have to show value add EVA as a state-owned company.
Denel's revenue decreased slightly to 8 billion rand from 8.2 billion in the previous financial year. More than 60% of Denel's revenue comes from exports. The company says the gradual decline on local defense spend has forced it to look to global markets to generate revenue.
We, Denel, are sitting in a conundrum where the bulk of our business, which we do, is export-based. So very little support, and I think when I say little, I don't mean it's not there. DOD, Arms Corps, definitely our primary customer. We have great relationships. We've got great support in that particular front. But the pie is just too little for Denel and the rest of the industry within South Africa to heavily rely on for survival in a sustainable manner.
Denel has admitted that it is experiencing liquidity challenges, with its debt-to-equity ratio having increased, and it has reiterated that it is receiving very little support from the South African market, with local defense spend currently at less than 1.3% of GDP. Naledi Matlapeng, SABC News.